Investors on Wall Street that are following Oklo stock are curious about two things specifically. Number one, they're curious why Oklo is not signing more customer agreements, securing relationships with people to buy the power that they are intending to generate. And secondly, they're curious why Oklo made an acquisition of a company that will help it sell some of its byproducts. So that's what I'll aim to address here in this video. Why the company is doing what it's doing, why it's not signing those deals with those customers just yet, and why it made that acquisition. So let's take a look at these interesting developments for Oklo stock investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so Oklo management did say that they have seen a sizable increase in customer interest since the consummation of the business combination in May of this year with the Alt C. So ever since they came into business and they stated their plans, they have seen a lot of customer interest. However, they haven't been signing those deals. And that's the curious part of this thing is why are they not signing those deals? Well, it turns out they have a good reason for not signing those deals. One that after I reviewed it, see it as a prudent play here because of the uncertainty surrounding the business. So let's take a look. So while they are actively trading term sheets and purpose proposals, it is important to note that we are focused on commercial term quality over speed. And what they're trying to say here is they're trying to build contracts, they're trying to create contracts with customers that are high quality, meaning it's favorable for the business longer term, more sustainable, rather than just signing deals really quickly, right? A lot of these innovative companies that just recently start up and they're really trying to get off the ground, they make the big mistake of signing these deals that generate great publicity, but they're not really good for the company. And you can see that all over the place. You can see it with companies like Plug Power that signed these deals with companies like Amazon, and they're able to publicize that deal like, look at us, we signed the deal with Amazon. And they're able to go and take that to investors and say, look, we have a deal with Amazon. But when you dig into the details, that deal is not really beneficial for Plug Power. It's beneficial as much as it can use it to market to other investors and raise more capital. But in terms of the actual terms of the agreement, not very favorable for Plug Power. And you've seen a company like Plug Power, it's plagued with massive losses on the bottom line, and it's having a very hard time getting out from under those losses, partly because of the types of arrangements it has signed with customers. It's not lucrative for Plug Power. And you see that with a company like Rivian, the electric vehicle manufacturer and seller. It's also signed a deal with Amazon to sell up to 100,000 of its electric delivery vans. And while that deal did a lot to put Rivian on the map in terms of publicity, the arrangements, the specifics of that deal haven't really been great for Rivian. And their losses are also mounting on the bottom line. And I can go on and on with examples like that where smaller companies sign a deal with a big name company so that they can use that deal as a selling tool, as a marketing tool to take around to other investors. And you can read in the comment section of some of the videos that I've done with those companies that I'm mentioning. And you could see one of the reasons many investors were bullish about those companies were because they were citing those deals they made with Amazon or those deals they made with the Walmart or those big name companies, right? And they point to that and say, well, this company or this and this company is going to have great success because they signed a deal with this and this company, right? And that's not always the case. And I warned a lot of investors on why that's not always the case. And most often, those big companies like Walmart and Amazon and others take advantage of those smaller companies. They know that when they sign a deal with those smaller companies, they give them the marketing clout, they give them that halo effect. And so they bargain for tough terms that are very lucrative for the bigger company like the Amazon or the Walmart, but not very lucrative for the smaller company like the Rivian or the Plug Power. And so I like that Oklo is taking a more cautious approach here in signing deals. They don't just want to go out and sign these deals just because they want to get a big name company on board or just because they want to get a contract signed and on paper just to create a little more certainty, at least on the sales side. So I like that they're taking this cautious approach, and investors, I think, should appreciate that they're being a little more cautious here signing these deals. And then I like that they also tell investors that, look, we have a lot of interest. We could sign deals if we want to right now, but we're just taking a more cautious approach. So they also decided to fully incorporate Atomic Alchemy onto Oklo via an acquisition. So they're acquiring this company. And so what they do is they have radioisotopes, and which are these radioactive elements that are vital materials with growing applications in cancer treatment, diagnostic imaging, space exploration, and one of the most important highly demand areas right now, semiconductor manufacturing and fabrication. And they note that the US lacks a robust supply chain to support these critical resources. They go on to say that Oklo's fast fission technology can generate electricity using fuel, recycled fuel, which can also produce valuable co-products such as these radioisotopes. And Atomic Alchemy has also built an attractive supplier and customer pipeline to support commercialization of its operations and its products. So Oklo made this acquisition so that it can help facilitate the sales of these byproducts that the company is going to generate in their normal day-to-day operations. And Atomic Alchemy has already built this sort of ecosystem where it can take those byproducts and turn it into commercialized products to sell and thereby help Oklo with a incremental revenue stream here, a incremental profit stream here on the side of its core business. So it's a nice bolt-on acquisition for Oklo. They also go on to say that there's a diminishing supply. The radioisotope market is estimated to be in excess of $55 billion by 2026. And so there's diminishing supply and the market demand is growing. That's the kind of market you want to participate in. The acquisition will be funded, the $25 million acquisition will be funded with stock, and the price is based on Oklo's most recent 20-day average closing price. And all shares issued to Atomic Alchemy are subject to 1 to 3 year lockups with no early release mechanisms. So Oklo is going to give Atomic Alchemy $25 million worth of its own stock under the condition that those receiving the stock are unable to sell in the next 1 to 3 years, depending on the person and the type of arrangement they lock in. So at least these shares, even though it will dilute shareholders of Oklo, at least they will not be able to be put on the market until at least 1 year from now. So these were two interesting questions that investors had about Oklo, and I hope that this clarifies some of the questions you may have had about why the company is not signing more deals and why they made this acquisition, this $25 million acquisition. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.